Morning traders, Paul with GammaEdge here. Today is Tuesday, the 16th of August. Let's get started. Pause your players, please read this to the end. It is important to you and it is important to us. If you agree, hit the play button. Summary for today, all the trends are up. Paper trades, of course, if you're going to do anything, but just be aware, short-term trend, intermediate-term trend, long-term trend, all good. Short-term gamma continues to wane on the put side. We're seeing this in the wing charts. We are seeing through OI, though, longer dated puts being added, so just be aware of that. The projected move today, we've checked it a couple times. Either option prices are wonky here in the pre-market, or there's no fear in the market. With the move yesterday, we think there's just fear coming out of the market, which is always the time to start looking for insurance. So paper trades, of course, but look for insurance. Key levels, 4,300 is the plus GEX. We bounced against it yesterday, a little over, a little under, closed just under it last night. 4,000 is the minus GEX level, and COI, call open interest, and put open interest are still there. I think the thing to be aware of is that we're getting into a pretty good distance between COI and POI. It's coming up on 7.5% above, and that's a big number. So just be aware when we get this, the rubber band gets stretched this far apart, there is a tendency to come back. All that being said, we are seeing 43.25, 43.50, and 4400 being added to in terms of calls. So just be aware of that there is a group of the marketplace who thinks we're going to continue to grind through, and we may very well do that. Downside, we've seen a shift of the sands. 4250 is important. Below that level, 4250, we open up the door to 4200. The deltas are still positive, but the gamma has flipped. So short-term bearishness is creeping into 4200, but the entire complex is moving up with the exception of what we're seeing in COI and POI. There's a disconnect in the SPX, so just be aware of that. Market model, as I said, firing on all cylinders. Long-term trend, slopes are all up. The distance here is good. And the short term, the cumulative tick remains above the shortest term moving averages. Taking a look here at the SPX condition, we are seeing a move upward in the zero GEX levels, which means that the distance between the goalposts continues to come up. The major change occurred over here in the SPXP, which is the PM settled. That is part of the combo complex, so what you see here is being reflected up over here. Everything across the board with the movement up in spot price is going to drop put GEX, it's going to increase call GEX, and on a short-term basis, and that's why we're seeing pretty much what we're seeing here. So the trend is definitely intact, and it's given rise to this kind of behavior in the wing charts compared to the previous day. OI change, I want to call your eye out to these different circles. We are seeing, always check the magnitudes when you see these charts. We are seeing puts going in, and you can see the distribution of those puts relative to the calls. So the magnitude of the puts going in and where they're going in is relevant. You can see distance that in time is significant, and hence why we made the statement we are seeing longer term puts going in, and the magnitudes are fairly significant. Distributions, again, take a look at those and just make sure you understand the behavior that you're seeing. Key levels for today, I've shown the association between the SPXP here on the left and the AM and the PM here on the right. Key takeaways for you, 4,000 is still that line in the sand here, 4,300 here. I'm not sure why we're not showing the minus GEX. It also is sitting here at 4,000. Over here on the PM side, just be aware, sea of green. We're not seeing any flip on the deltas until you get pretty far down. Key takeaway, expected move is pretty low. We have not seen this low of an expected move. So as I said, either the option prices this morning are wonky pre-market. We've checked them several times, and I ended up taking the what I would consider the more aggressive value here. I think the key takeaway is that we do expect dampened volatility today, even though it is the last trading day for the monthly VIX. But just keep an eye on the ranges and what we see here. 0 DTE, fairly clean structure. You can see here below the 4260 range. We start getting a shift in the moneyness, and we want to pay attention to that. Although this is cash settled, this does reflect over into the SPY, the Qs, and the IWM, so we want to pay attention to that, and Taylor has posted those charts in their respective channels in the Discord. Above 43.25, you can see moneyness really shifts, and nothing above 43.50 in the 0 DTE. The combo, real key levels here in the deltas. I think it's important just to understand we've not pushed through this level, like a $62 billion level or a $56 billion level ever. It doesn't mean we can't go down there, but I just don't see us being able to absorb that. On the flip side, pushing up through this is going to be fairly significant. We're going to have to see a lot of work today to get up above this 4,300. We call this a pinning area when we've got this just huge level of delta and gamma sitting overhead. That all being said, if we do clear 4,300, it opens up the door here for 43.25, 43.50, and 4,400. To the downside, 4,200, you can see we've got the sign change in the gamma, and we're in a negative gamma regime, about 42.05 and below. I just don't see it happening, but just be aware that things start getting really slippery if we move down into this range. Finally, over here at Circle 1, 24%, 3%. There's a couple other slices of the pie that are not shown here. So all totaled out about 28, 29% of the SPX is coming off between now and Friday, and that's a significant amount of money that's going to get redistributed. The overall SPX structure, note that we're seeing the growth of these higher levels up here, 4,300. We closed here just below the 4,300 strike, 4,250, really the last line in the sand here. 4,200 has flipped. This is the transition area, and if we move down into this area, it gets really, really slippery on the way down. 4,000, 4,005, which is the JPM hedge here at 4,005, you can see what they look like. The 4,000 has got the minus GEX level. You can see it's the most dominant here, and it also is the COI and POI. So that's it for today. If you like today's content, please come join us here at GammaEdge.us. When you put that into your browser, click on the pricing tab, sign up. That'll get you a 14-day free trial. All the tools turned on. Got a great active group here, and a lot of different trading styles, so it's a lot of fun. Trading Edges with S at Twitter, and then here, of course, on YouTube. If you like today's content, let me know by smashing that like button, and of course following us so that you get notified next time Taylor, myself, or Michael post a video. So with that, we will leave you. Have a great Tuesday and hope to see you in the Discord. Thanks, everyone.